And for more on the situation in China, we're now being joined by Vishnu Vardhan from Singapore. He's Executive Director and the Head of Economics and Strategy, Asia and Oceania at the Mizuho Bank. Thank you so much, Vishnu, for joining us. When you're looking at China right now, it's suddenly beginning to seem almost as if the wheels are coming off. What's really going wrong there in China?
Well, I mean, that's a really good question. And to be honest, we've been fairly concerned about China's situation for a while now. But what's really going wrong at this juncture is clearly the fact that the economy is in a state where simply providing liquidity via the banks isn't resolving some of the pre-existing solvency crises. I mean, typically what we say is, look, this is a liquidity crunch, it's a liquidity situation. If we don't want it to, devolve into a solvency crisis, we should be very quick with liquidity. This time around is quite different because the property sector, big parts of it are already in a bit of a solvency crisis. Hence, providing liquidity in and of itself doesn't solve the problems. And the problems that we're referring to here quite specifically pertain to a sheer loss of confidence. So the confidence deficit in the economy is mind-boggling. So consumers are not spending. Very, very critically, they have lost confidence in the property sector. So they're not buying property, which means the property developers are all in problem. And that has seized up cash flow in the economy because the wider economy, over 30% of the economy, whether through direct business or ancillary business, depends on the property sector. And that includes local governments who rely on land sales by property developers for their revenues.
So, there's one thing. So yeah, sure. let me just try and break that up a little bit to help people understand this from a distance. Look, there will be cyclical ups and downs in all economies. It'll happen in China, it'll happen in America, it'll happen in India. The question that I think a lot of people are asking is there something more structural that is happening in China? And I'm not to put too fine a point in it, a lot of people are also saying that what essentially happened in that decade of spectacular growth that we saw in China, 2005 to 2015, and that period onwards, a lot of it was just inflation, like they were just pumping in money. People were building real estate left, right, and center. Infrastructure was being built, which may not have had a use. And now, frankly, it's a bubble that is starting to pop. That would be the doomsday scenario. Do you think there's any chance that is what's happening?
This time, there's a huge structural component to it. I don't think it's isolated structural or completely cyclical. But the three parts of the structural, one has got to do with what you said, which is we've had more than a decade of just the kind of mind-boggling credit push. So very high leverage in the economy means that they are now struggling to boost growth further via credit. You also have a demographics that shifted, but structurally, the other big thing here is that there seems to have been a change in terms of the policy.
So let's break that down further. I was talking about some of the wheels of the Chinese economy that have been ticking. All of this has also been predicated on a lot of foreign companies coming and setting up their FDI investment into China, and China as the manufacturing engine of the world. Chinese exports, and that has been the real driver of the Chinese economy. If China is fighting with half the world, as it seems to be doing right now, then the issue is people are diversifying away, moving away, and if that export engine starts to dry up, it compounds the problem then.
That's certainly a point to be made. In the near term, though, what it just means is that it's going to be fairly disruptive in the sense that costs will have to go higher in the near term, just as we're looking for alternatives trying to scale up, so on and so forth. So in the very near term, apart from situations where there's explicit restrictions or punitive tariffs on trade, China might still retain some of the runway of advantages it has built up over the years. But that can erode very quickly, as you rightly point out. I mean, the geopolitical situation, along with the domestic political control over the socio-economic situation, these two factors may be the biggest factors that would, I think, retard China's growth potential. So that's where we see the risks residing. So we're not so fussed about whether China will do 5% or 4% or not this year, because our worry is that they will struggle to get underlying growth above 4%. And that remains a reality to be dealt with.
But the real doomsday scenario for China, the real scary situation for the leaders of China would of course be unemployment and youth unemployment, and that going into social strife of some sort. I mean, that's of course what they are most concerned about. Now, if you start having youth unemployment numbers reaching levels which are so bad that the Chinese don't want to publish them anymore, then there's always that risk of political instability, which for the Chinese Communist Party is the worst possible thing to happen.
I cannot agree with you more. I think everything about the Chinese Communist Party is about control. Having control means they need financial, economic stability, they need social stability, and they need political stability. And you touched on the aspect of social stability, which also has got very tight linkages to the economic stability and the economic well-being. So these two are inextricably linked. And you're right that this poses a very dangerous situation.
Viswanathan, thank you so much for joining us. It really helped us clarify to a great extent what's actually happening inside China right now. Thank you so much for being with us.